Hello everyone, I'm Dr. Stock, and in this video I want to take a look at the markets and see just how they're performing, and I also want to talk a little bit about Tesla with their investor day. I want to get over there and watch that, take some notes on it, and report back to you what I think from that video. Also, I want to take a look at ChargePoint and C3 AI because they are both reporting earnings in the after hours tomorrow, and I want to tell you about how I'm playing both of those things so you guys can let me know what you're doing, if anything, down in the comments with any of those companies. Real quick before we get into it, check out the link for Moomoo down in the description. Trust me, you won't be sorry that you did. First of all, you get access to an awesome trading app, and on top of that, you get up to 17 free stocks. Here's how you do it. You go down to the description, get my link, sign up, deposit $100, you get 7 free stocks, including AI and BBAI, and if you deposit $1,000 or more, you get up to 17 free stocks. So please check that out. This offer does expire, so get your free shares before that offer is gone. One other thing, if you want to hear more of my commentary and see more of my Patreon exclusives, please find that link down in the description. Click on the link for the Patreon, go over, sign up, check out the Patreon exclusives, join me and my community over in the private Discord. We'd absolutely love to have you. That said, I'm Dr. Stock, Doctor of Education. Let's get right into it. All right, so up on your screen is the SPY, and I was talking about this the other day in my video, and let me zoom on in. What you see on your screen is the daily chart. We have the 50-day simple moving average, which is this blue line coming down through here. Let me get rid of the crosshairs so they're not in your way. And then this orange line that you see coming through is the 200-day simple moving average. Now, we have not quite made it down there. We are about between 1% and 1.5% down from 4,000 in the S&P. The SPY tracks the S&P, and so it's right in between, but we'll call it 1.25% down from that 400 mark. That 50-day simple moving average is acting as resistance. We have not made it down as far as the 200-day. That 200-day, let me bring the crosshairs back, is at $390, almost $391. So we have about 0.75% to fall before we get there, and I think that's where we find some much firmer support for the S&P. So we're going to have to watch and see if we make it down to that level over the next few days. Basically, we have manufacturing down, we have rates up, we have inflation that we think is going to stick around higher for longer. We get the CPI coming out in just under 2 weeks, 13 days from now, March the 14th, we have that coming out. And the narrative in the media is most definitely changing to one of fear, uncertainty, doubt. That's right, the FUD. So that's something we want to pay attention to for that. Now for the S&P, it is possible that we make it back up over resistance for that 50-day, but that means that we have to break up over 4,000 in the S&P. And now that we're below it, that can be really firm resistance for us. So we're really going to have to watch. I still think that there's a shot for us to see some levity in the markets early on in March. We're going to have to watch and see if that plays out. Remember, I said that when Q1 earnings hit, that I think that we're going to see much more weakness in the markets coming up by that time. So March, if we are going to have a last hurrah, I think March is it. I think by the time we hit Q1 and we start looking even more forward through the guidance that we get from the companies and the earnings that they report, I don't know that we have a whole lot of good news waiting for us there. And the word recession has been coming back. The word inflation has been sticking around. Transitory is done. Disinflation, we haven't seen as much disinflation, especially in services, as we want. So those are concerns that we have. If we have any chance of a silver lining, in my opinion, is through the inflation data, CPI, PPI data, maybe even consumer sentiment coming up. So we're going to have to see how that changes in March. And like I said, that is our hope, and really holding on to that 200-day simple moving average, I think, is going to be a big thing in the SPY. Let's take a quick look at the Qs. So QQQ, tracking the NASDAQ 100, we are pretty much sitting, at least for these low values that we've had, on that 200-day, which is right around 289, 290. We're almost there. So if that support holds, I think that we are in very good shape. And let me zoom out. I didn't do that for the SPY. Let me zoom out for the NASDAQ. There we go. So you can see this orange line. Let me get rid of the crosshairs. You can see this orange line coming right across the bottoms and sitting across the tops of these. We're actually at a decent area of support right now. And I said in my last video, we want that 200-day to hold if we're going to bounce back up from our current price that we're at. So we'll see if that happens. We'll see if we have that continued sell-off. And I also said that I still hold on to my SQQQ shares, and I keep adding to it. So I stand by that. I'm going to dollar cost average through it, leading up. Even if we do see the market's rising through March, I still think that going into April is where we start to see more of a turn, if not sooner. So I should qualify my statement a little bit that if we do see the markets rally a little bit through March, I don't think it's anything that puts us to new highs. If anything, I think that we retest previous highs, and that's about where we max out. So from where we sit right now, that is about $21 up, which would be about a 7% rally in the Qs. So that'd be about a 7% rally in the NASDAQ. I'll go back to the SPY just for a quick second. And when we look at the SPY right now, sitting at 394, the last big peak that we had, making over the previous peak is even going to be pretty big for that. So that'd be $14 up. So what's that? That's like 3.5% from where we currently sit. And if we were to retest this most recent high that we got, which in my opinion would be a pretty big feat, I don't know that we make it up that high in the S&P. I think honestly that 3.5–4% is as much of a rally that we could see in March. If we see one at all, it is possible that we get a further sell-off and we retest some of our previous lows where we break down through the 50-day and the 200-day, especially when Q1 earnings come out. I think that's going to be a big moment in the markets. The inflation indicators that we get could also cause very big moments in the market, so we want to watch that. Also, any information we get on GDP, jobs, like it's just a critical time to really look at the economic reports because they're going to have a big influence in the direction of the markets in the near term. So we want to watch those, and we want to keep being forward looking and like trying to place where we think the economy is going, where the market's going, where the consumers are going, and use all that information together to make good judgments for our investments, our trades, whatever it happens to be in the markets themselves. Now for Tesla, we closed right around the $200 mark, and I'm honestly not very surprised that that's about where we closed out. And we have this little bit of a, you can call it a pennant, a wedge formation, whatever you want to call it, a narrowing between the tops and the bottoms where the bulls and the bears are fighting over the price. And as of this point, the Tesla Investor Day is just getting underway. We can take a look intraday and see what's happening, and we can see we did, at least in the after hours, get a little bit of the sell the news event where we drop down below that 200. We're going to have to watch and see as that plays out for tomorrow. Basically, we could drop just below 200, or it's something we could rally up, as high as that previous high of maybe 217. Although sell the news, especially given the current market bias, I think sell the news is a little bit more likely, and it's hard to tell from this after hours volume that we have here. It's not super significant. It might rival a little bit of some of what we would typically see during the after hours. But like I said, we're going to have to watch that when the regular hours come out. And I also want to pick through the Tesla Investor Day to see what sort of information we have and what that looks like going forward for Tesla. Forward from there, let's talk about ChargePoint. So ChargePoint rallying a little bit in the after hours. I'd rather go out to the daily chart for this one. And for ChargePoint, the bottoms, they've come up pretty nicely on this, that we're actually back up to be in between, sort of range bound like we were before, between the 50-day and the 200-day. So we did drop down below the 50-day for a little bit before rallying back up, peekabooing up above a little bit, coming back down. So bouncing off those two. So for ChargePoint, being one of those EV infrastructure plays that we have, and the fact that they're on American soil and being part of that, standing to gain part of that $7.5 billion from the federal government to build out the EV infrastructure, we want to listen for news for that on ChargePoint when their hours take place. That's in the after hours of the market tomorrow. This one, I believe it's either 4:30 p.m. or it's 5 p.m. Either way, it's in the after hours in the market tomorrow. So for me, I believe that this is going to be a big move for us. And how big of a move? Well, from our current price right now, we are at about $11 per share. And if we zoom out on this one, we actually have fairly strong support for ChargePoint pretty much at its current price. And we've hit other lows near that time that have been down. There's really not a lot below its current level of support, so that can be kind of scary. So we could fall down into some of these other previous bottoms that we have here, somewhere around that 1050 mark. So maybe about 5% down. If we drop down below that, there's no floor. The floor falls out on this thing. So if we get some very negative news coming out for ChargePoint for their earnings, that they don't stand to benefit as well as that we thought, that their guidance isn't great, that they're really burning through cash, whatever it might happen to be. If we get bad news, there's not a lot below that 5% mark. Maybe even you could argue maybe down as low as like 7% down below their current price. Upward, however, just in case they do move up from where they're at, we had a little bit of a double peak recently, right at about 1150. So right about 4 or 5% up from their most recent price. And this thing, we know that we max out around the 200-day, but that would be a huge move to the upside, 15 to 20% up from where it's currently at. So if I were going to make any sort of trade on this whatsoever, I do have a long position in ChargePoint. By the way, I am an investor in ChargePoint. I do think that they are the top EV charging play that's in the market right now. If I were to make an options play on this, I would try and keep it expecting a 5% move up or down at a minimum. If I choose a long strangle, I risk less capital, but I also need the stock price to move more in order for me to break even or even be profitable. I would do either one of those things, and I'm talking for me personally, never financial advice. Either way, whatever I decide, I will put that buy announcement out over in my private Discord that's part of my Patreon. That link's down in the description if you'd like to see that. Okay, the last company I know that I mentioned at the beginning of the video, this is C3 AI, and for me, this is purely a technical play with their earnings coming out tomorrow in the after hours. And you can see it was part of the 2022 sell-off. As a matter of fact, even in early 2021, you can see that slow decline of it. This is a pre-profit company. They bottomed out at about $10 per share. However, they were part of that January rally. And then we also had that big pop talking about ChatGPT. I will get through that in my videos clean without multiple tries one of these times, I promise. So got the AI hype train hitting, and then it's been consolidating. Look how quickly that volume tapered off. Now it still is good volume compared to what it was before all the AI stuff really came to the spotlight, but it has tapered from the explosive movements that we saw earlier on. So what was my rationale behind buying the option strategy that I did, and why did I choose the timing that I did so far away, relatively speaking, from those earnings? Well, here's my reasoning. Seeing the narrowing like I did, expecting the big move, even though earnings is what I believe to be the main catalyst, I still thought that there could be a break in either direction, and I wanted to be in the long strangle options play in order to take advantage of any move we saw between now and earnings. So I'm eating a few days of time decay by doing that. I realize that cuts into my profitability. However, I believe that in the end, it will be worth it. All right, so let me summarize this thing. The S&P, the NASDAQ, they can most definitely fall further from where they're at. The NASDAQ is sitting on support. The S&P is sitting pretty much right at resistance. It's down below that 50-day. However, it still is above its 200-day. So we want to watch for those things. And if you're bullish in the markets, you want to see that support hold. If March continues to deteriorate news-wise and economically, we could break through that support that we have. Breaking through the 200-day is a sign of market weakness, and it is possible that we fall down even further, and then we're just going to have to see as the economic reports come out, FOMC metering report comes out, and summary of economic projections come out. As for the directions of the market, we're going to have to see what sort of sentiment that we have coming from the consumers, what we have from the economic reports, what we see in the summary of economic projections from the FOMC closer to the end of March. And then for me, as I've mentioned earlier in this video, the big thing that I'm waiting on are the Q1 earnings that come out starting in April. I think that's going to be far more telling for us for the direction of the economy. And I think that we could see a lot of softness there, and that's why I have invested the way that I have, or I should say, taken a short hedge with SQQQ, expecting that to come along by the time April hits and we start hearing those Q1 earnings. So that's what I have for you guys. Thank you for watching this video. If you enjoy my commentary and want to hear more of it, please check out that link for the Patreon down in the description. Come on over, sign up, check out the exclusive content, be a member of the community, chat with us in our Discord that we have over there. Also, down in the description, sign up for Moomoo. Deposit your $100, $1,000, get your free stocks. You're paying yourself. It's also helping support this channel. Thank you for all the support that you've shown, even if it is just putting the time in to watch this video. Hit that like button, subscribe if you haven't, and ring that notification bell. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.